Our next guest says a major tech crash is coming beyond what we've already seen. He's positioned for a 20% pullback in the Nasdaq. Joining us on the fast line, Larry McDonald, editor of the Bear Traps Report and a CNBC contributor. Larry, so 20% down. What's the catalyst for it?
Hey, Melissa. Great to be with you guys. Well, first of all, the Fed tipped their hand and really shocked assets this week. All they had to do was say the balance sheet is on cruise control for 12 months. That's all they had to do. Why didn't they do it? Well, they didn't do it because they're trying to send a signal to Washington.
Okay. So so that was the catalyst? We're already seeing the 20% decline in motion is what you're saying.
Well, in other words, when you're long stocks today, let's think of deflation bets. We've been through 10 years of Brexit and trade wars and COVID. So the entire investment community is set up essentially in deflation bets, bonds and stocks. As of a week ago, there was $10 trillion in tech stocks, which is mainly a deflation bet. And now the Fed, they could have promised us more accommodation. They're not. So they're concerned about Washington and potentially they would like to see more fiscal help. They're concerned about potentially a vaccine. So the fact that they're not offering and guaranteeing us accommodation, the richness in these tech stocks are absolutely going to collapse. We're going to see in our lifetimes, in our careers, this will be the greatest migration of assets the next 12 months from tech into not just value name materials. Look at the transports. Transports are outperforming the Nasdaq by 12% this month. The XME materials outperforming the Nasdaq by 11, and value, Russell value versus Russell growth outperforming by close to 7. So this migration is probably the first or second inning.
So how are you positioned? You're short QQQs, I imagine, short a bunch of high-flying tech stocks, and long what? Anything in the market? I mean, if it's the greatest migration of value in this market, where's it migrating to?
We love Tech Resources is one name, and especially Mosaic. So both in the resource area and Mosaic in the ag space, you have too many people in these deflation bets. For example, Tech Resources, incredibly cheap company, not one ETF on ETF.com website owns Tech Resources. These stocks are under-owned. Investors around the United States have too much money in tech, too much money in bonds, too much money in deflation bets, and that money will migrate very, very fast over the next, say, 6 months.
Larry, good to speak with you. Thank you.
Thanks, Melissa.
Larry McDonald. Tim, what do you think?
Movement of the people, as Guy said. I think this is a case where the resources trade I continue to be very bullish on, and I do think there's both a long-term cycle element of this. Remember, commodity cycles aren't 1 or 2 years; they're 5 and 10 years, and we're back there. And remember, you don't buy commodities when they're cheap; you buy them when they're expensive. So some of these charts are just getting going, in my view. My view on technology is that there will be a 20% pullback, and it's what I've been saying. I think if you look at the June 29 levels, is which a bunch of these stocks went off into la-la land, and if you take that up to the high of the Nasdaq, that back to 245 in the triple Qs is a 20% pullback. And I don't think that necessarily has to take the market out of bed. And frankly, with the Fed backdrop that we have, I don't think you'll get that. But yes, transports have outperformed the S&P 25% in the last 85 sessions, and I think that will continue.
All right.